Good evening, everybody. December 10th, 2021. Let's take a look at Bitcoin here. So, couple of things to go over. At the time of the video last night, we were somewhere in this region here. And I laid out a couple different scenarios. Let me bring over basically what I said. I said if we get above 40, or if we stay above 47.2 but fail to get 58.5, I'm considering that we have done that right here. You know, this morning, basically, 8 a.m. Eastern Standard Time here in the U.S., we had this pump, which was immediately rejected once the markets opened, you know, over the next hours, and started coming down again. So that puts us pretty firmly, I would say, in this scenario where we are above that level, but we failed to get 58.5. Okay, this whole scenario here below 46.6. First off, we did not actually go below 46.6 yet. You know, it never actually made it down there. However, because of this action where we pumped up here, it kind of negated that level anyway. So let me explain what I mean by that. Looking at this chart, okay. But I think the point is here that, you know, we kind of entered this territory where we're probably going to get some choppy consolidation. There's a small chance still of a bullish resolution here in the near term, but it's looking like consolidation is more likely. But so what I mean by this pump up kind of invalidated that 46.6 level is the following. If I was looking at this as a potential 1 and 2 downwards, as I said last night, was a possibility. And actually, let me get rid of this fib. Okay. If that's our 1 and 2, and this was our 3, or, you know, we were going to continue downwards in a 3, technically it would have had to continue down right around here. So we would have seen something like this, 1, 2, this would have been part of 3, but it would have eventually gone down and cracked that 46.6 level. Then we would have gotten the 4 and the 5 down. If we'd seen that, that would have been the scenario that would have pushed us into the very bearish case, because that's 5 waves down, 1, 2, 3, 4, 5, right? At that point, I would have expected a bounce and then a breakdown into the 30K region, okay? Because we did not see that, right? Because we saw this instead, and this came up way, way higher than any reasonable expectation for, you know, the fourth wave within this third wave would have done. Because of that, we've reset some things here and made this a bit more convoluted and hard to read, and just, you know, pushed us into the choppy territory more than anything. So what I see here is A, B, C down. I see this as an A, B, C up. We potentially then have another A, B, C down after that, right? It is possible that we have this 1, 2, 3, 4, 5 downwards in a diagonal. That is possible. And we will likely then see that's going to be kind of like a leading diagonal, which it does look like it's within a channel there, right? If that was going to be the case, we would now expect to see A, B, C up of some description, and then further breakdown. So, you know, below that level again would potentially be bad. But here's where it gets complicated. This could also be a more complex W, actually W's down here, sorry, WXY. Okay, WXYs are basically 3 ABCs put together, or 3 corrective patterns put together. In this case, it looks like ABCs. I think I probably would have expected Y to go a bit lower. Let me see if that hit what could be reasonable If we draw a fib from here, W to X, it did hit the 764. All right, so let me get rid of this green box because that's useless now. This would have been the expectation right here for that Y wave down, anywhere between the 618 and the 1236 extension of W and X. All right, I told you this was going to get complicated. Okay, so we did hit what could be considered that WXY, and then we can go up from here and move into a larger diagonal, basically. All right, so I've got to keep an eye still on this diagonal situation here, but at the moment we're looking at basically just expanding that second wave down. So this then would be the end of the second wave, 1 up, 2 down in a diagonal. And so to confirm this, basically all we need to do is get above that high right there. That's that 51.8, 51.9 high. If we can get above that, and again, kind of get back up into this orange zone, I'll reset that because that'll change slightly. But if we can get up into that, that higher zone, breaking through this high, the likelihood then moves into this being a leading diagonal. Okay, so line in the sand number 1, as of right now. As this continues to chop, all this can change, but line in the sand number 1 is kind of this 51.9K, right? So I'm going to put a line there. Line in the sand number 2, it's possible this Y is not finished. It should hold somewhere within this green box though, so breaking down below, I would say, down below the 1236 is not good, but let's use the 1382 as our line in the sand, which makes sense. That's starting to get down really, really deep here anyway, towards the end of this red wick that we had down here, the big sell-off that we had. So basically, best case scenario, bulls really need to get this above 51.9 in order to keep any sort of bullish resolution. If we break down from here, if we get this ABC up off the low and then break down further, we're either going to get the choppy consolidation that I've talked about, sideways consolidation, or we're going to get a breakdown, and I really can't say which one of those is going to be most likely, but I'm going to say that at this point in time, I now view, let's get rid of this, about 44.1 as the lower bound of what can happen within here reasonably, and 51.9 as the upper bound of what can happen within here reasonably, to still continue just being sideways action. If we break either one of those levels, I'll move more into a bullish or bearish expectation based on that. And as I said last night, we are going to have to kind of reevaluate constantly as this continues to play out, because this real choppy stuff, if this just starts doing ABC, 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 something like that, in that sideways range, we kind of have to begin kind of modifying what we have here, because then the WXY really isn't valid any longer for this to be a second wave. The leading diagonal thing is kind of off the table. So I know I'm always trying to be as clear as possible, but really this action has made it quite difficult to be clear. But at this point in time, I'm going to view anything down to 44.7 as potential support, and breakout of 51.9 as a strong push into the direction of the bulls winning, and giving us a diagonal off the lows. There's no way, at this point in time, there's no way that this is impulsive, right? It's not going to break through here and go into an impulsive wave up, but you know, a diagonal up off the lows like this is still possible, and basically that is thanks to this pump up that we saw before the dump. If we had seen, like I said, that dump first without that pump up, I'd probably be selling right now and expecting lower lows. But because of that, it broke that structure and has made things a bit more unclear. So I'm still in spot positions and still just kind of waiting for this to resolve itself one way or another. So I know that's frustrating, as I say, you know, watch these certain levels, and it did, you know, it didn't break the 46.6 level, so that's good, but it very well could have broken that 46.6 level, but still then bounced because of this little upward motion that we saw here. So, all right, let me just adjust this orange box. So if we're going to get, again, this is not a guarantee, but if we're going to get a move up, we're now looking at anywhere in, actually let me use the 764 still, anywhere in here realistically. So it didn't move all that much, but kind of like this 57.9 area is the sort of the ideal. If that's going to give us a third wave up, we should see that 57.9 area. But obviously that first hurdle is 51.9. We got to break through there, and then keep a close watch, because none of this action is incredibly productive right now. It is very, very choppy. So I'm not suggesting anybody start doing any high leverage trading at the time, unless you're an accomplished scalper and you know what you're doing. But this is treacherous territory to be trying to actively trade in. I think it's best to just kind of let it do its thing, and you know, use these lines. You know, we'll keep modifying those lines to let us know what to do with spot positions, basically. If it's time to, you know, get out, or if we can continue holding on to them safely, and when to maybe scale out of them. If we do go into this bullish scenario, you know, we'll look to scale out, or I will look to scale out of even spot positions. Once those 5 waves play out, I'll be looking to scale out and then look for a better opportunity to kind of buy back in again with better risk reward, because after we get 5 waves up, we will get a rejection downwards somewhere in that region if that bullish scenario even plays out. Okay, I think that sums everything up for now. Hopefully that all made sense. If not, you can always comment on the video here and or join the Discord. We've got a public section of the Discord. You're more than welcome to ask me questions in there as well. All right, everybody, have a good night. Let's see what the weekend brings.